Good afternoon, traders. I want to discuss my grade A setup. Old reliable setups that I am 1,000,000% confident in. Setups that have not failed me to this day. I'm not saying I haven't lost trades. I'm greedy. I'm inconsistent. I'm impatient, like most other Americans or people from the West. We have microwaves, we have fast cars, big houses. We we're used to having things our way. It's a challenge to reel yourself in. So today I want to share my grade A setup, along with a little bit of an explanation of how I got here. Uh, I'm an ICT geek. I study his teachings. What you're going to see mostly came out of the 2022 mentorship, and a couple of his other videos, Power of Three, all of that good stuff. This trade setup works on any time frame. The market is fractal. It does the same thing on every time frame. So I am a swing trader. I use mostly the weekly. I do come way up to the higher time frames because I like to get long range projections and understand what's happening. I'm going to start here with the 6 month chart. Most people have never even seen the 6 month chart, but I'm going to start here because I like to understand direction, right? If you are a smart money person, you trade order blocks, you trade imbalances. We can clearly see we have a bullish order block that closed in June. So my expectation at that time, I fib this green candle. I'm going to highlight my zone. Price needs to come back here to the discounted rate. My 78. I'm going to be interested in shorting the market until it gets to this area. Now, when the new candle opened up, it didn't just start shorting. It pushed up further, which is cool. I didn't have an interest in this pair. I traded something different until the market started pushing down. Then I started participating in shorts because I am comfortable and confident that the market will push to my area of interest. So let's drop down to the 3 month. So the 3 month, you can see how it pushed up and it started pushing down. We'll bring it to the 1 month. At the end of September, it ended with a bearish order block, right? If you know anything about these moves, the bearish order block, we broke structure right here. It's called a chalk. We wait for price to push back up, right? We wait for it to pull back. If I fib this red candle, and highlight my zone, delete my fib, I understand that I'm going to look for a short either in between the discounted rate and the 78, right? I mean, it's all the discounted rate, but you understand what I'm saying? So at this point, I'm going to drop to the 2 week. So at the end of that month, we knew that the price was going to trade up. So at the 1st of October, we took bullish trades into our zone. At that point, price wicked out. There's still some imbalance left up here, but it will be filled, at a later time. Price wicked out and started pushing down. 2 weeks ago, we got the bearish order block that told us price is ready to continue. It's pushed down. We can expect some resistance right here. We can expect the bounce when it runs into this unmitigated zone. But there's a good chance, that if I fib this blue candle, if I fib the red candle, there's a good chance the price will push from this area, right? I can delete this for now. I can delete this for now. If I drop to the 4-hour chart, I can see that price has started to push up. There is an imbalance right here. So this is probably a good area that I can look to short the market. When the market opens Sunday, it'll probably pull back, give me this upside down head and shoulders for y'all pattern people. Price push up, this will be a couple hundred pip move to this area, right? This is liquidity. These highs are liquidity, the imbalance right here. Then we can hop in for the short, and I can look to short this market. All the way to grandma's house. This is about a 9% trade, 9.8% trade. You don't necessarily have to hold it 9.8%. You're guaranteed to get this imbalance pretty much, So I would probably look to profit here. We'll call it a 7.7% trade. It's a great setup. Now, obviously, this is a 794 pip trade. This would be more of a position type trade, but you can take shorts and trade back and forth all the way down. It's going to happen. You can actually see the head and shoulders pattern, right? I know that this is pattern stuff, but if you're a smart money or a structure guy or gal, you broke structure, right? You broke these lows here. You traded back up into the imbalance that caused that break. Now we're pushing back down. The next thing we're going to do is break these lows. Then we'll push, and we'll either stop here or we'll push to or break this low, right? If we want to go back up to the weekly chart, this is a weekly bullish order block. It's going to bounce. That's why I said I would take my profit, right? But once it bounces, maybe it will push down into these areas, right? This order block was tapped and went up, but there's probably, more orders in that block. So this order block has not been tapped. So you're going to need to take profit at the top of this order block because I guarantee you it has some juice. And it's going to get a reaction. So I would definitely look at 201.60, 201.55-ish as a TP1, right? And again, this is a grade A setup, in my opinion. If you go look at ICT Mentorship 2022, video number 3, you're going to see this exact same setup on the NASDAQ chart that he's talking about, but it's a 15-minute setup. It's a 15-minute setup. He's going to explain that from here to here is your bullish order block, right? Then the market pushes up. So when you come back in, you can expect price to come to this level, which is this same order block. So you don't have to be greedy. You can trade this. I know I have it pushing further down based on some lower time frame stuff, but these moves, again, this is a grade A setup that you can catch. You know, it's probably about 400 pips, 500 pips to this first TP. That is going to happen. It's going to happen. But again, like I said, you have the market pushes down. We break this first low. Price pulls back to let you in the trade. I guarantee you this is over a 50% retracement. Then it pushes down. You get this momentum candle that creates an imbalance. Price immediately trades back up into this imbalance. You could have had a stop loss here or above this high if you wanted to. And now the market is pushing down further. This is a grade A setup. Where is it pushing to? Well, this move pushed up. We broke this high. It pulled back. Now it pushed up again, creating the imbalance. It's going to push and close this imbalance. Right? The overall move pushed up from the 6-month chart, right? From the 6-month chart. So you can expect that from this 6-month chart is going to pull back at least to your discounted rate before it pushes up. Now, healthy price action is just wick to wick, which we have right here. But based on the lower time frames, there are other imbalances that have been created that we can expect to take here. Again, this works on, you know, whatever you're trading. And I am trading this week. I'm trading GU, right? I'm trading GU. If I look at this chart, you know, we had pushed up, we broke these highs. So I would have expected price to pull back to this imbalance on the weekly, right? If I fib the entire move, my discounted zone, I have an imbalance in it. So it makes sense that price would push back down to this level. Now, it doesn't have to push back down to this level in one push. We pushed down, we got chalk, we broke this low, we trade back up into this order block. Now we're pushing down, right? We're either going to break this low so we can continue our push down, or we'll push down to the imbalance that I have highlighted on the 4-hour. We'll push down to this imbalance before going higher. I don't run the market, you know, I'm just going to trade the market the way I see it. If we push and fill this imbalance, we probably retrace, we probably have a reaction here. If it gives me more bearish sentiment, then I understand why we get bearish sentiment. If we get more bearish sentiment, we will come down. My next target will be these lows. We'll either double bottom here or push through these lows, at which point we'll pull back and fill an imbalance that created that push down. And we'll just trade it like that until we fill this imbalance. There's an unmitigated zone right here. This all works as long as you're trading based on these same concepts, right? We don't have to rush. We don't have to guess. The market will give us exactly what it's doing. We can also watch the dollar because the dollar is moving in the opposite direction, right? You see the market comes down, creates a low. For all intents and purposes, equal lows. ICT says equal lows are targets. It gets liquidated. The market runs up for like 12 weeks. Well, now we got to pull back. We pulled back. If I fib this move, I guarantee you we're in the discounted zone. If you look closely at the discounted zone, we had an area right here where we had equal lows. Again, we liquidate those lows. Now we're going to push higher. Where are we pushing to? Probably this imbalance, right? We got to break these highs first, right? We got to get through this zone and this zone. We got to break these highs, but if we break these highs, this is our target, right? I don't have to guess about this. Price pushed down. We broke all these swing lows, right? We ran the swing lows. Price should trade back up into the imbalance before going lower. It's the same concept, right? Where are we trading to? If I fib the gargantuan move, the unprecedented rise of the US dollar, if we trade back up here, right, and trade further down, this is probably a good area to target, right at your optimal trade entry, right? If I fib the move from the top that broke those swing lows, if I fib from here down to the low, I would expect price to pull back into my zone. Here's my zone right here. Here's my golden zone. And that big imbalance is in my golden zone. It's all, it all works together, guys. Grade A setup. If you understand it and if you use it, your losses will be minimal. Minimal. Frame your setup. Wait for price to get in your area. Look for chalk on the lower time frame that tells you price is turning around. Take the trade. Take it to where the trade is going. This is all I do. I surf with the market, not against it. Hopefully you guys got something out of this video, and I'll see you guys out in those market streets.